Welcome to Trade Pro. I'm about to show you the ultimate trendline trading strategy, then test it 100 times in a row on the bar replay feature so there's absolutely no cheating or hindsight trading. This will take a very long time to do, and I don't think anyone else has done this, so make sure to smash the like button, comment for the YouTube algorithm, and use my Webull link down below to get 2 free stocks valued up to $1,850. All you have to do is deposit $100, claim your 2 free stocks, then you can sell them and keep the money if you don't even want to use Webull for trading or investing. Now, let's go over the strategy, then get into the testing, and all the results will be at the end. Let's go. All right, let's go over the general rules for this strategy, starting with a simple outline of what the strategy entails, and then I'll go over some examples on the actual real charts. So here you can see that in general, we're looking for points 1 and 2. So in an uptrend, we need points 1 and 2 to actually draw our trend line, and then any other touches down are where we can actually take a position. So for an uptrend, we're looking for 2 troughs. In a downtrend, we're looking for 2 peaks. So a trough would be the obvious low, then we're looking for a high and then a higher low to create the next trough. Once we have our trend line drawn, we're waiting for that third touch where we can actually take a position if we get the correct candlestick pattern, meaning a long wick rejecting the trend line or an engulfing pattern, okay? And then we're going to be targeting A or B, which is just the high of the pullback before the touch on the trend line. So same thing with a downtrend. We have points 1 and 2, which are now peaks, not troughs. So we get a peak, we get a low, we get a lower high, another peak, and then we can draw our trend line. Then we're going to be looking for that third touch in order to actually take a position based on the candlestick pattern, okay? So I think it's going to be easier for me to show you guys a couple examples on the actual charts here. So let's close this out and go over this example. So as you can see, we wait for a low, a lower high, and then this pushes down, okay? So at this point right here, we can draw our trend line in and then wait if there's a pullback to the trend line. In this example, remember, we need to see either a wicked candle or an engulfing candle at the trend line, okay? We don't want to see a significant push and close over the trend line, or it's invalidating our setup and we're not going to enter a trade, okay? So in this example, we get a very nice wicked candle, which would be our entry signal, and our stop loss goes above that wicked candle. So this would be our setup. We're targeting the low before the pullback, and this gives us a fantastic 1 to 3.9 risk reward ratio. Now let's go over to an example on a long trade. Here's a long example. So as you can see, we get our point 1 for the low here, then we get our point 2 for a higher low, and we simply wait for a point 3 to take a long position at. We get that right over here with a long, nice supporting wicked candle, and place our stop just below that wick supporting candle and target the highs of the pullback, which gives us a 1 to 4.74 risk to reward ratio. So this one, very good risk reward ratio. Here's another short example. So as you can see, we get our peak number 1, we get a low, we get a lower high, and then we simply wait for that pullback into our third touch. Then once we get that third touch, we need to see a rejecting wick, which we get right here, or an engulfing. So here's our rejecting wick very clearly, and this is our entry candle. So we're just putting our stop just above that wick, and we are targeting the low of the pullback. So this gives us a 1 to 2.76 risk reward ratio on this setup. All right, so I think I'm gonna get into the testing now. If you guys need more examples, I can make a separate video on going through a bunch of examples. Just let me know in the comments if you want to see a video like that. All right, but let's get into the testing. right, the results are in after the 100 test, which took quite some time. And guys, keep in mind, this is very subjective. It's a trendline trading strategy after all. So just remember that. And another thing I need to mention is something I changed while going through and doing the testing. If the risk reward ratio was less than 1-to-1, I did automatically change it to a 1-to-2. Okay. So let's go over the results here. It was done on euro against the US dollar, 1 hour time frame using a variable risk reward ratio. Took 13 months to find those 100 trades, which is pretty normal for a 1 hour time frame. There were 44 winners and 56 losses. The most lost in a row was 6 and the most won in a row was 4. The gain on the account, 39.48%. So here's the breakdown on the right side. Winners total percent gain was 95.48%. Winners average risk reward ratio was 1-to-2.17. And then of course the losses totaled to minus 56%. Each one is minus 1%, 56 losses. So net gain, 39.48%. So yeah, guys, again, it's subjective. Results may vary, but anyway, you can probably improve this if you take it out to a daily, 4 hour, and 1 hour, draw trend lines on each time frame, and so you can kind of get a better, bigger picture sort of view on things, and not go counter trend too many times, because sometimes it's kind of hard to know which highs and lows to draw your trend lines at when you don't have a bigger picture. But anyway, I'm gonna pop it up on the spreadsheet and call it a day. All right, here it is on the spreadsheet, falling at spot number 19 out of the 59 strategies tested so far. So actually doing pretty well considering how many have been tested. Just goes to show how, lots of different things can be profitable if you're consistent using a good risk reward ratio. And how I would improve this one is a couple things. I'd add in another layer of confluence with divergences. So let's say you have an upward sloping trend line in an uptrend, and price is coming down to that trend line. So you're looking for a buy, and you get your nice rejecting wick off of the trend line, but at the same time you get bullish divergence on the RSI or another oscillator. So you could combine divergences with your trend lines and your candlestick patterns to kind of get a higher level of confluence. Also, you could, of course, add in the 4 hour time frame trend lines, our daily trend lines, and even maybe 30-minute, 15-minute time frame trend lines. But yeah, just some thoughts that I had while going through this. You could probably make it a bit better by adding in a few extra layers. But anyway, that's pretty much it. Thank you guys for watching. Hope you liked it. Have a nice day.